Ed Parcaut, welcome to the Multifamily Investing Academy's podcast. I'm your host, Charles Dobbins, founder of the Multifamily Invest Academy and the creator of the Multifamily OS system, and having our upcoming events in hotel to apartment conversions, where we will teach you everything you need to know about how to do it and how to do it the right way. So without further ado, I have Mr. Ed Parcaut here. He's an experienced and respected mortgage professional with over 25 years of experience. He's a founder and CEO of Lending for Living. His passion is for helping his clients navigate the complex process of purchasing a home with ease and understanding. Ed, welcome to my show.
Oh, thanks for having me.
My award-winning show, Ed.
Wow.
Yeah.
That's pretty good.
I can say that now. You know, all these guys are out there saying like, well, I'm the New York Times bestseller in this, like, and we all know how that game is played.
Yeah, how much cash do you have?
Yeah, exactly. I am legitimately a award-winning podcaster. So anyway, listen, one of the things that you, in your bio, you talk about this 9-part docu-series on hacking real estate that you were on. Now, Ed, when I first got started in real estate, there was no such thing as hacking real estate.
I hate that word. I'm sorry.
What does it mean? What exactly does it mean?
Well, you got to remember, I'm old. So hacking to me meant that you broke into places and through that's what you hacked into places. And then there was crackers who cracked into it, but didn't do anything bad. You just went in there and you go, oh, look, I got in here and I'm out of here. Hackers actually did something wrong.
Oh,
and then all this. And so this actually 9-part series was called something else when they first approached me on it. Right. And then they changed it at the last minute because the documentary was done for, do you know Dan Fleshman? You ever heard the name? He's out of LA. He was 19 when he went public with his first company. Okay. And he owned the trademark Who's Your Daddy and licensed it to everybody. Anyway, he got into real estate and started a real estate company called The Avengers. So he reached out to Jeff Hayes Films, who is a documentary people out of Utah, and asked them to do this documentary for him. So I think that's how the name changed at the end, because he actually owned the documentary.
Okay. So what is it that you're doing that is unique, that requires this whole new term?
I don't know what what the whole thing of the show was, how are people buying real estate? How are people doing stuff? And how did they make money from it? I ran into the people doing the documentary at Traffic and Conversion in 21. Yeah, I had to think about what year it was.
During COVID. All right.
Yeah. So it was, right at the end of 21 down in San Diego. And I told them I have a radio show. I've been doing it for, 4 years at the time. And I was writing a book, and they were like, we want you on to talk about the mortgage side. Because when I talked about it, I said there wasn't going to be a bubble, and everybody thought I was crazy. And I also talked about how if you go back 31, the average age for someone to buy a home is 31 years old. And if you go back during 2004 to 2006, back 31 years, Roe versus Wade had just came in, and it plummeted birth rates for the next decade. And that's why we overbuilt homes during that period of time, thinking people were coming to age when they really weren't coming to age. So they were overbuilding homes. And that's why we had so many homes on the market. Now, if you fast forward to today, we're in a 6 year of a birth rate expansion still, and we have not built any homes. And that's why we are where we are.
Okay. First, there's the Roe v. Wade.
Everybody feel like you're crazy, and
no. Did you get that? Did you get that concept from Freakonomics?
No, I got that concept because I know Barry Habib really well, and I was running through all these things going, these numbers don't work. And he talked about how he sold his company in 2006 because he saw what was coming, because he went back and researched and found out about the birth rates.
Okay.
And that's why he sold his company. His company did is for loan officers told us when to lock, when not to lock, where rates were going, where this was going. He sold his company, and then 5 years later started a new one.
Okay. Because the book Freakonomics, have you ever read it?
No.
Okay. You got to read it, Ed. You would enjoy it, because there's a whole chapter on Roe v. Wade and its impact on the crime rate in New York City. They're saying like, well, the reason why the crime rate went down in New York City was because of the stop and frisk, because they kicked, they moved the loiterers along. But what they came up with in Freakonomics was that no, it had nothing to do with that. It had everything to do with Roe v. Wade, and birth control. And so you got to read it and to understand exactly why they're saying that. Now,
I can understand, because the people that took advantage of more than anything was a certain population.
yeah. And so the Freakonomics, if you look at to what people saying, we're going to have 1 million apartments coming online in the next 12 months. It's been since 1973, 50 years since that we last had that many starts coming on. And so we're going to be in a glut like we were back then. And what they don't tell you,
You're talking about in 1970?
73. And so what they're not telling you is the fact that we've got about 2.6 times more apartment dwellers now than we did back then. And therefore we don't have enough. Even with 1 million coming online, we don't have enough. Right. So yeah, it's the same situation. Now, interesting thing, Ed, you're a mortgage guy. You've done it for years. You wrote a book on home ownership.
Right. Financial freedom.
Financial freedom. And but you just mentioned traffic and conversion. And you just mentioned, Ryan Dice down there in San Diego. I say all the time that this business is nothing more than sales and marketing.
Mm-hmm.
And so what would a guy like you be doing down at the TNC conference?
Because if you don't realize today, you're a media company doing what you do. You're a media company first.
Exactly. Yeah.
And people don't realize that. I do more video during the week. I don't do as much on TikTok as I should, but I do so many lives per week because I run a radio show. And then I was like, you know what? I started podcasting that radio show in 2018, then having it videotaped and put on YouTube. And then we started doing things differently since the pandemic. And then I'm like, you know what? I want to start doing lives during the week from the radio show to see if I can take my listeners to bring them to my show without having to be on radio. Well, I do 7 lives a week from the radio show, and they run about 30 minutes each.
Really?
Yeah.
So it's like a daily show you're doing.
Mm-hmm. I'm doing 8:30 in the morning, Monday through Friday, 2 different real estate agents. And then I do another one at 11:30 at 11 and 11 on Tuesdays and Thursdays, a different real estate agent. And we talk about different things. Each one of those agents are at different age range in the population.
Okay. So where does that content live?
It's on Facebook, LinkedIn, and YouTube.
Okay. Perpetually, even on Facebook. Okay. Because
I do my lives through Facebook, LinkedIn, and YouTube.
Right.
In order to do the ones on TikTok live, my other person has to have at least 1,000 followers. I have, 10,000. They don't, so I can't do them that way. I could do one-sided. Instagram, I could do it there, but for me, Instagram's all right. My age group of people I hit a lot is in, the older stuff.
Yeah. They're not into Instagram. Is that what you're saying? Or they
not
are?
all of them, but It depends on. I also do 2 other podcasts, actually 3, that are in different age range, like Helping the Brave, which is for vets once we take the uniform off. And again, that's live on LinkedIn, YouTube, and Facebook once a week at 3:30 Pacific on Wednesdays. And then that lives on its own website. It lives on its own stuff, and it's on everywhere out there that podcasts are. Yeah. So I just feel you have to be. Nobody cares how much you care until they know how much you actually care. I forget the statement exactly, but basically you need nobody cares what you know until they know how much you care.
Right. That's it. Good.
And it's so true. So there's so much more you have to do now and you said sales. I think in my industry, we took 10 trillion debt of 12 trillion debt and put everybody in 2s and 3s in the single family home area. They're not doing anything because they don't have to, right? That was such low-lying fruit. Everybody was doing 30 transactions a month, and we were living high on the hog. We weren't making as much as we normally made because it's just the volume and we had to do. But what I'm getting at is now we actually have to get back to sales. I've been in this industry for a long time, and I was in sales from the beginning because it was a different time when I got in, and everybody thinks they're not a salesperson. And that's why I started this thing called ACES 53, which is when I was in college, I had a professor who was like, remember 4 aces and a joker. Aces stand for attitude, commitment, enthusiasm, and smile. That's what you bring to the table, right? When you're in a sales transaction. The joker is that unique ability that only you have, or something you learn to get the sale through. Mine was my voice, because I sold by the phone, right? I didn't realize that until I got on radio and everything, and started wearing headphones, that I had a deep voice and everything else. It's funny how we don't know how we sound.
Yeah. Yeah. Okay.
It's always,
and the joker, aces.
so the joker is that unique ability that you bring to the table.
Okay.
So,
okay,
or
but
you
aces
can learn.
53.
Yeah. So 53 is the joker is the 53rd card in the deck.
Gotcha.
And the reason we had to name it that is because Joker and Aces was a band, and they took Joker and Aces already.
Oh,
But what's nice about Aces 53 is you'll never forget it, and it's short.
Yeah. Yeah. Oh, that's cool. Very cool. So, you know, we talk about obviously the podcasting, that's the marketing side. And then the sales side is you actually speaking to the people. I mean, I always say you're not, the first sale in the multifamily business is when a seller or an owner accepts your offer. That's when the sales start. And that's it. That's somebody said yes to your offer, and they're going to buy from you now. And that's the first step in the process in multifamily. And, you know, everything is sales and marketing. That everything boils down to sales and marketing. All right. So tell me about your book, the Homeownership book. Let me grab the cover of it again. Here we go. There it is. Financial Freedom. But first off, Real Estate Jerky. Let everybody know the name of your podcast is Real Estate Jerky. I mean, like the Jerky Boys. Is that what we're kind of a takeoff?
No. So Real Estate Jerky was a blog I was doing in 2010. And I was trying to come up with a unique name, and I'm like, Real Estate Jerky, give you something to chew on, play off of, you know, a long time ago when you chew on this, you know, that old statement. And so I had it, and they asked me to do a local radio show on Power Talk 1360, which is a talk radio show.
Cool.
And so I said, well, first, do people listen to radio? Come to find out, about 71,000 people listen to the radio station on a daily basis.
Not bad.
Not bad at all for Modesto, California, which our population at the time was 210,000 people.
Yeah.
So we go all over the county and everything. So I started the show, and they were like, what should we name it? So there had been real estate shows on before and finance shows on before, but I wanted to do it differently. And they were like, I didn't want to call it Central Valley Real Estate or something. And I'm like, I'm just throwing this out there. Don't care if you like it or not, but how about Real Estate Jerky? And give you something to chew on. They're like, oh my God, we can do Smokehouse Studio and this. And that's basically what we've been doing. You never forget the name of the show because it's so unique.
Yeah.
And we give you something to think about, which back in the day was called Chew On. So,
okay. So what is the book? Tell me about the book.
The book. So what happened is from the radio, the radio show was started because I knew all these millennials didn't want to buy homes because they watched their parents lose their home during the Great Recession and all that period of time. Yeah. And so I wanted to break that. And then from that and how I've been doing, when I talk to you about a loan, I talk about credit. I have a whole process. Like I tell people, you need to have a script, your script of how you walk people through a process. I don't care what you call it. It's a script. And so I wrote my book, how I actually do talking to you. The first thing we talk about is credit. And we go through the process. So, because if you don't have the credit, you can't move to the next step. And so we go over how to fix that, how to go through different things. And then I go to income and then, because if you don't have the income, we'll go get a better job, go to school, whatever you got to do to get a house, because multifamily is a totally different animal. And so is buying your first home. I always tell if you're going to help your kids at all, help them buy a fourplex or a threeplex with a FHA loan. They're in the first unit, they get to rent out the other 3 units, and then eventually they go buy that single family home when they get married, to start in that market, to get very cheaply get into investment mode. Yeah. So the book was written on the same way what I do to get more people to get into real estate, because I'm in California. In about another 5 years, 70% of the people in California will have to rent.
Yeah.
Because our average, even in our town, our average is 500,000 purchase price.
For price. Yeah.
Yeah. And that's, that's for most people, they unheard of. So. It's
crazy. I just went over, looked at a little house here in the town I'm in. I'm in Nashua, New Hampshire. And it was like, it was $350,000. And Ed, it was a dump.
Yeah.
It was a tiny little, nothing. And they're paying $350 for it. It's crazy.
Yeah. And that, back in the pandemic for those 2 years, $700,000 house, your house payment was $3,000 a month. Now a $400,000 house is your payment's $3,000 a month.
Yeah.
Yeah. And people are like, well, I'm going to wait till rates come down. They're not going to happen. Rates aren't going to come down probably for our next lifetime. They won't go back to 2% or 3% that low. They might come down to 4 and 5, but it's going to take time.
Okay. So you say that rates won't come down. Is that really because they were artificially low for the last 10, 15 years? I mean, the Fed just keeping them low.
Yes. And then also during the pandemic, we all thought we were going to die. So rates are based off of fear, right? And uncertainty. During that period of time, we didn't know what was going on with our lives. We didn't know who did it, who did that. That's like when we went to the Gulf War in the 90s, right? When we hit that into rates plummeted then at the time also. Not this low, but at the time, much lower than they were. Mm. And they were trying to still stir the economy and everything else. So the Fed actually kept them lower than they should for so long. That's kind of why we are where we are now. Also, I look at it's like having a budget at home. All right. To fix your current situation, you get into a budget. Both people agree, but really only one does it. It doesn't work. And that's the problem we have right now with our government is the Fed's trying to fix it. And the other side's going, we need to spend all this money so we can get these programs in place. Because if we don't, we'll never get these programs in place. Because once we get them in place, they can't take them away. Right. And that is so wrong how we should run a country. But I'm not a president. So,
yeah. All right. Well, tell me about you made the comment that there won't be a bubble. Why do you see it that way? And I'm not disagreeing with you. I just want to get your perspective on it.
My perspective on it is right now we are short 17 million homes nationwide, and it'll take us a decade if we build them at 1.7 million a year to get caught up. And we're not anywhere close to that. I think the number was 683,000 homes were just recently year over year done, new homes. Yeah. And so we're so far behind because of what we happened in the 2004 to 6, we overbuilt homes.
Yeah.
And then for the next decade, we didn't build anything. We had to absorb those. And then we get to a point where we need to build them. And then we hit a pandemic where we can't get supplies. Everything's out on ships. There are other problems, all this other stuff. So now it's a perfect storm. So once we potentially get caught up, right, we need 1.7 million. So we're not going to get caught up until we get there. Well, every year we don't get there, that's another 500,000 homes added on to that number that we need. Yeah. And when I say that number, that's not just single family homes. That's multifamily. That's
just housing units.
Correct. That's doors.
Yeah.
Yeah. And that's the problem. Once we get to, say we get out, we're 15 years from now and we finally got caught up. Well, during the pandemic, we had more babies born than we did during almost as much more than the boomer generation. Yeah. So now you're going to have all these kids coming of age. It's a perfect storm going forward. So long story short, buy everything you can buy.
Yeah.
Multifamily, whatever you can get your hands on, because you're going to be happy you did. Yeah.
The demand. Yeah.
Yeah.
I mean, the problem though, and let me see if you can shed any light on this from your perspective. But the problem that we had in multifamily wasn't so much the overbuilding. It was the 20% per year increase in rents because the demand was so high. But at some point, that customer base cannot afford to keep paying 20% increase every single year. But the problem is that people were buying at these inflated prices, anticipating that it's just continuing to go up 20% per year. And now their loans are coming due. The floating rate mortgages are coming due, and they're screwed. They're absolutely screwed. And that's where the mistake was made in my business.
Right, because they didn't go with a 4.5 fixed rate, which we always say. Because after 2008, I tell everybody it's 30-year fixed rate. I don't care about adjustables. I don't want a 5-1, 7-1, or 10-1. I don't want to put you in anything that potentially we have no idea what's going to happen in the market, because no one saw we were going to 4% in an interest rate in 6 months. I mean, I saw something was coming the moment they shut down the pipeline for gas, right? So that first signature on that desk I knew we were in trouble. And the reason I say that, because we got rid of stuff just because we didn't like somebody. People voted not for something, they voted against something. You have to vote for something.
Yeah.
And that's why we are where we are now. And we need to come together differently. But back to your statement, yes, people saw, like in California, we were going up 22. My town was going up 22% a year.
Yeah.
San Diego was almost 30. LA, all these places were ridiculous. And we still had people leaving the state, and people go, well, everybody left California. We have 40 million people in California. What's 700,000 people?
Yeah.
Right. It's nothing. It's a drop in the bucket.
Yep.
And if we didn't have those people go, we wouldn't have been able to sell homes. Typically in California, and I only speak this because I know this state, is we normally do 450,000 single family home transactions a year. During last year, we only did 247,000. And that's because inventory wasn't coming on.
Yeah.
This year, I ran the numbers. We're going to be between 161,000 to 180,000. So what does that mean? Values are going up.
Yeah.
Because people, it's a supply and demand thing.
Yeah.
We have not enough supply for the demand. Why is there not going to be a bubble? I just said it, supply. We don't have enough supply.
Yeah.
It's not going to happen. The only bubble, and I coined this a few months ago, the only bubble we're going to see burst is the opportunity bubble. So even Dave Ramsey was saying that if you need to buy in the next 5 years or you're not going to be able to purchase. I totally believe that. We were saying that before he said that. I'm not saying we're better than him. I'm just saying we've been saying that you have an opportunity right now. Prices are low because people were nervous. They thought we were going to go up to 12% interest rates. They were scared. They were used to this 2%, 3% artificial rate that's really not ever going to come back. Average rates for us is between 5 to 7%. That's historically, if you look back over time. And so if you look, so that opportunity you had to get that house at a good price. Yes, your rate was a little bit higher, but you'll always be able to refinance if rates go down. You will never be able to go back to the price lower. You follow me?
Yep, absolutely.
Yeah. And I think people they're nervous. They're afraid to nobody wants to make a mistake. It's okay to make a mistake. Over a 20-year period, you'll benefit from that little mistake you made.
Yeah.
Not a big deal. Yeah.
Yeah.
In 5 years. Yeah.
Ed, I agree with everything you just said. Everything you just said. I mean, I've made mistakes. The best, failure is the greatest teacher. Mm-hmm. And so go ahead and make mistakes and don't be afraid to. And granted, some of my mistakes hurt a lot longer than other mistakes. But man, I'm a different person, a better person now because of having done it anyway. So yeah. All right, give me an example. Just I'm gonna put you on the Bud Light hot seat. Because
we don't do Bud Light. We only do Coors Light around here now.
Is that right? I heard Coors Light was going down the same path.
You know what? I really don't care.
Yeah.
I drink more wine now. I'm more
exactly.
of a wine.
Me too. Yeah. I can't drink beer anymore. I look at what I did in college. I can't do it anymore.
I don't like hoppy, so it has to be, beer with nothing to it. So,
all right. So tell me give me an example of a mistake that you made that changed your direction.
Well, I mean,
in real estate, yeah,
real estate wise, I mean,
career wise.
Well, see, I've been doing this forever. When I first got into it, I worked for a guy that when I watched him in 3 years do this stuff that normal people wouldn't do. Come to find out, he was bipolar, manic depressive. He's alcoholic, but he changed as being an alcoholic towards money. This guy made $18 million to himself in 18 months with what we're doing in the mortgage industry, went bankrupt. And so what happened to me is watching him for 3 years is stuff I couldn't have learned by myself for 20 years in business. So I'm getting as learn from other people's mistakes so you don't make the same mistakes. Yeah. And that's why I also do a podcast called Inner Edison. Our greatest accomplishments come from our greatest defeats. You have to understand you're going to make mistakes. 2008 happened. I wasn't expecting 2008 to happen at the time. I wasn't aware. I wasn't ready for it. And that hurt me drastically. I even talk about it in my book. It affected me drastically where I ended up going bankrupt and having to start all over, and yes, and so when I tell people I don't judge, I don't, because stuff happens to you, you have no control over.
Yep.
I mean, you look recently with 4% change in our interest rate, everybody who normally would do everybody's doing a quarter of the volume they used to do on transactions. because people aren't moving, people aren't doing stuff.
Yeah.
And so you're going to see a lot of companies combining each other, scaling, foreclosing, you name it, not foreclosing, but, and bankrupt, you name it. Everything's going to change. And you're going to see a lot of companies lay off more people. That's okay. It's going to happen. These are opportunities. You brought up the whole multifamily, how it's going to have a problem coming forward. That's an opportunity for people who have money on the sidelines to get into multifamily because of the fact that these people didn't do it right. This time, do it right. Learn from their mistakes.
Yeah. Okay. Last question. This Inner Edison, what is that about? That title threw me for a little curve, and I thought, wow, I wonder what this podcast is about.
Yeah, well, my wife came up with the name because basically Edison, how many times it took him to realize how to make a light bulb, right?
Okay.
So it's about your mistakes along the way. And so what happened is I was running it for about 2 years. My goal was to talk to people about their mistakes and go off of there, and so you can learn from them, and then bring people on who can help you so you don't make the mistakes. October of last year, I went back through and I was like, and I had a lot of episodes in the can. And I was like, I got off track. And so I said, okay, this is what I'm going to do. I'm going to stop right now, relook how I want to do. And so May 1st is when I started back up. And it's only about this, what you asked me. What did you learn from the mistakes that you had?
Oh, cool.
And so we're talking only about mistakes. And if you don't talk about, and that's to a point where if someone talks about a mistake and they go off this whole tangent, I'm cutting all that out. A 30-minute episode is only going to be 10 minutes if they don't give me the way I want it to go.
Yeah.
And a lot of people go, well, you lost listeners. I don't care. I want it done the way I wanted my vision from the beginning. You got to remember, I was building that as I was building my mortgage company. We were crazy during the time. So you would record them and we're like, yeah, this is good. But then you start, and I had some really good ones. I had Brian Smith on there, the UGG founder, and he talked about how he lost his company during the process of building it. And most people didn't know that. Right. And that was in the beginning. So it was perfect along the way. And just, 2 years into it, it was not right. So I changed, like I said, we're restarting it back up May 1st. And I want to make sure that people know it's all about failures and how they overcame them, what they learned from them. And I had one guy on there who talked about, he's in the flipping homes and his biggest failure was losing 20 grand. I kind of was a dick, excuse my language, because I'm thinking I had processors who cost me that, right, on transactions. Did I fire them? No, because they learned a mistake that they'll never do again.
Yeah, exactly.
Right. And so for me, I was like, and then I had another guy who was in the manufactured homes, where he was doing those. And he talked about how, he was only with one entity when they were selling. And then they were like, oh, we don't have enough for you because we're doing with this other entity. And he's like, it really affected my business. So I'm big now because of that. But I love this podcast and the thing about it, but I'm still learning exactly how I want it to be, but it's all about your failures. And that's all I want to talk about. So you understand that it's okay to fail. You're going to fail. You're going to screw up. You got to tell people that you failed.
Okay. Can I tell you something? I am the best mentor coach for multifamily, and only because of my failures. Because I learned so much from my failures that I never would have learned. And all these guys out there that have never had to give a property back to the bank after going through a crash, you're not going to learn anything from that guy. But you just gave me an idea for my own new podcast that, hey, why can't I have two podcasts? You just gave me an idea, and I'm going to call it the Colonel Sanders Podcast. And it's going to be all about people who got started in their business later in life and how they did it. Colonel Sanders, guys, my idol, when they changed the highway system and put the road away from his restaurant when he was age 65, he was out of business. And he had to start all over again because they didn't have Social Security. He was getting no income. And he had to get out there in 1,000 door knocks before someone said, I'll buy your system. And that was and that's how Colonel Sanders did. And how many other people are like that, where they had to get started later in life, where they came up with an idea later in life and they just went with it. And man, I think thanks, Ed.
You're welcome. No problem. Anytime you need anything else, reach out to me. But back to the like recently with us, with rates going 4%. I mean, that's putting a lot of people out of business because I've been doing this for 28 years. I started when I was like 13, of course. But I've never seen rates go up that fast.
Yeah.
That is ridiculous. I mean, we went from, yes, a little too much, even though we didn't have enough volume back, but people were making changes. Hey, I have a baby coming. We want another bedroom. So we're going to sell our house and buy another house. Now they're like, these two kids are going to stick together because it's going to cost me $1,000 different a month if I make a change, and I'm not going to. Yeah. And that's what we're seeing differently is we're not seeing that move up. And I knew when we were putting people in these rates that was going to happen. 85% normally of transactions that are existing home sales, there's 85%. I'm like, that's going to drop to like 50, 35. And that's basically, we're at like 46.
Wow.
And that's
because that's why there's nothing on the market right now, is because, hey, I got to sell it and I got to move somewhere else. And I got to get a new mortgage at this much higher rate. I'm not moving. Why would I move?
Right. Well, or what they do is I'm not selling this house. I'm going to rent it. And the difference in the payment is going to help me buy my next one at the higher thing. So so people aren't selling what they have so that somebody can buy it to move, they're just like renting it because I have people who are like, we'll never get rid of this 2.25. And I was going through I was like, oh shit, I did too well for you guys. Cause you'll never move. You'll never do anything. It's golden handcuffs is what it is.
Exactly. And it's a killer of your business. You can't get referral business. You can't get repeat business because people would never get rid of your product.
Right. And unfortunately that's what we did. And going forward, yes, rates will come down. It's just going to take a while. Yeah. And so the question is who's going to still be here? And this was a government thing that messed it all up. Yeah. Right. And this 2006, 2004 to 2006 was another government thing because they came in and said, we want everybody to get in the homes and we don't care how you do it. And so these banks, even though they blame people like me, a broker who we don't come up with these programs, we just provide them. Well, at the time, World Savings had that pick a pay loan and it was only for business owners because only business owners don't always know your income every month. Right. 1 month you can make a ton of money. Next month you can make nothing. You're not taking it. But with the pick a pay, you can adjust your payment. It was when Countrywide, WAMU, all those companies decided to sell it to wage earners, that somebody who knows how much they're making, they're on a paycheck with a pick a pay. And that's when that whole thing went down. Yeah. And it was because of those banks that are no longer here that caused the same problem. And and again, that was the government telling them, do whatever you can. If you don't believe me, watch the movie, The Big Short. Because the real trouble, did you watch that movie?
It is one of my most favorite movies. Yeah. I have one favorite scene. I'm going to ask you what yours is.
The stripper. Anyway.
Wait, do you listen to my podcast?
No, I just know. Because that's when he's like, that's how when I was telling you, people were buying 2 and 3 homes from tracks. And people thought we needed those homes and we didn't. And the guy's like, how'd you do that? Euro tips. Oh, it's stated income. Those things are no longer around. The government got in and put things in place so those couldn't happen again. They never would have happened. The problem at the time wasn't those programs, but it was the rating agency, the bond rating agencies who rated those as AAAs instead of Ds. If there were Ds, nobody would have bought those loans. Nobody would have done those loans. Yeah. And that's the problem.
No. Okay, Ed, I think deep down, I think you and I are dancing around a couple of issues that we don't want to talk about, but I think you and I are on the exact same page on everything. And everyone on my podcast knows that I love the Big Short, and my most favorite scene is when Steve Carell figures it out in the strip club, right? And it just makes total sense to him then. And I agree. I totally that is the most amazing scene. So, all right, Ed. His name is Ed Parcaut, Parcaut. Okay, you've got the Inside Edison podcast that's coming up.
Inner Edison, like it's inside,
exactly. Inner Edison. You've got the Real Estate Jerky show,
radio show. Yeah. That's also a podcast. Yep.
Okay. You've got the financial freedom, building personal wealth through home ownership. And how to, edparcaut.com, EDPARCAUT. It'll be in the show notes. You can reach out to him. Hey, Ed, it's good to meet you, man.
And good to meet you too.
If you want to, sure I will see you around.
Yes, you will. And if you want to get my book, just go to getedsbook.com. Takes you to my page on my website. You click on it, takes you to Amazon, so you don't have to spell my name wrong.
I can't believe that there was no other author named Ed who hadn't stolen that name yet.
No, they didn't.
No, they didn't. Those ads were never that bright, were they?
No, we're not.
No, no. Okay. Thanks, Ed. And I'll talk to you soon.
All right. Thank you. Have a great
Yeah.
one.